Today, I'd like to talk about some of the reasons why Forex is one of the top choices in terms of markets for professional traders. I, for one, prefer the Forex market as compared to stocks and cryptos, and I'll explain why in a bit. But first things first, all the content here is for educational purposes only, and all the information is based on my experience. So if you're going to take trades based on any of the information, please do so at your own risk. Right, let's get into it. So let's jump into that thumbnail that you saw, right? It's quite a silly analogy, but I think it tries to simplify what the Forex market is all about. It's really nothing that special. But as you can see here, there's like a predefined number of actors, right? You have 7 or 8 Spider-Man standing in a circle, pointing at each other, trying to do things together or trying to, initiate things or um, interact with each other, right? So I'll try to come back to this in a little while, but I think for now, what I just want to say is that, they're all part of the same puzzle. They all have similar profiles. There's a predefined number of players, and they are interacting with each other, right? So I think I'm just missing the New Zealand, the Kiwi here. More or less, this is what the Forex market looks like, right? So as you know, there are currency pairs. So like an Aussie dollar pair, for example, or a euro dollar or a dollar yen. So, they're interacting with each other, all right? And I'll go straight to the point, right? This is why Forex is so attractive to me and many other traders is because there's highly reliable intermarket analysis that you can do to make things more predictable. What is intermarket analysis? So, if I may just read off from Investopedia, it's a method of analyzing markets by examining the correlations between different asset classes. In other words, what happens in one market could and probably does affect other markets. So a study of the relationships could prove to be beneficial to the trader, and this is what we use to our advantage. So why is this possible? As I said earlier, it's because there are a predictable number of markets on this planet, right? So if you think about the stock market, there's so many tickers that you have to monitor. Yes, there's a finite number of companies. There's just a lot, right? So and sometimes it's just unpredictable, right? For example, in China, how many companies they have in Hong Kong, in the US and Europe, and they all boom and bust, right, at different times. Similarly, cryptocurrencies are the same. Number one, it's not predictable at all. It's still very volatile, and we don't know what's behind the market forces of crypto. Definitely a lot of manipulation, um, of course, alongside with legitimate market forces. Okay, so forex, of course, is based on major markets, right? For example, Australia and New Zealand are both commodity countries. We know they produce, things like they export things like milk or other agricultural products. Similarly, with the U.S. In terms of exporting technology, um, things like Japan, countries like Japan, who are exporting electronics and engineering products, etc. So at least there's a sense of real value behind them, and in definite terms what these countries do, what these markets engage in, and there's a finite number of them. Again, about 7 to 8 markets that you can look at any point in time. Okay, so let's do a quick quiz, right? And just show you how intermarket analysis works in a very simple way, and how you can apply it to your trading with your own preferred strategy or indicator or signal, right? This works with any strategy, really. Excuse me. So, for example, You wake up in the morning, 9 a.m., check the charts, don't see anything happening. There's no signals on your strategy, or there's no, confluences on your indicators. And then you come back at 11, or you get a signal saying that Aussie yen made a bearish breakout at 11 a.m. UTC, right? So it's 11 a.m. The first question here is, which Forex pair will you trade? Assuming that Aussie yen, it's a fresh signal. There hasn't been any Aussie or any yen signals in the past couple of hours or days or even weeks. So it's very fresh, right? And then an hour later, the, the pound yen also creates a bearish breakout, right? So definitely, already something's up with the yen. It's very strong, right? And it caused two breakouts, 1 hour apart of each other, right? And then an hour, let's say you look at the chart an hour later, 1300, you ask yourself again, which Forex pair will you trade? And we'll try to answer all of these in a little while, right? So, but try to ask yourself, which Forex pair will you trade, right? At any given time. Anyway, we get another signal at 1500 UTC. Two signals. One in Euro CAD, right? A bullish breakout. And then another on the dollar yen. Another yen bearish breakout, right? 1500. And you look at the charts and you ask yourself, which Forex pair will you trade? And I'll tell you my answers in a bit and the reasoning behind them, right? To the first question, I look at the chart at 11. I see an Aussie yen breakout, bearish breakout. I've never seen an Aussie or yen move in the past couple days, maybe a week. So I know this is fresh, right? Definitely 100% I will take the chance on this one, right? 2% maximum risk. Let's follow this trend, okay? To the second question, I come to the charts at 1300. I have no trades, okay? For example, I have no trades at 1300. And I see that both Aussie yen and the pound yen have made breakouts in the last couple hours. Which Forex pair will you trade? And my answer here is either none, or I might take either of these, Aussie yen or pound yen, but at a reduced risk, perhaps just 1%. I will adjust the lot size, make it smaller. The reason being is, if you remember the Spider-Man imagery, right? There's a bunch of guys in a circle. Imagine that the Aussie Spider-Man and the Yen Spider-Man, he said, hey, let's do something together, right? Let's do something cool together, fool around or whatever. You start doing it at 11 a.m., right? And then as the Yen Spider-Man pulls in the British Pound Spider-Man at 12 noon, saying, hey, you want to join this cool thing we're doing, right? Then at that point, the British pound is just a follower, right, to what Aussie yen were doing originally. So in that sense, the trend is already weak, right? They might get tired of doing that at any point in time, right? Even more so later at 1500, when they also invite Mr. Dollar to join the fun, right? So now there's four currencies having fun, all led by this guy Yen, the Yen Spider-Man, right? Who's doing all these things with these three guys, right? They might get tired anytime soon. So there's a big chance that the trend will end if you take, any of the later breakouts, right? The pound yen and the dollar yen. So yes, you might want to take a chance, but I would reduce my position size, right? Because by the time, and we go to the 1500 uh, time slot, by the time it's 1500 and the dollar yen has broken out, the yen may be tired of being bullish at this point and may decide to reverse. And suddenly you say to yourself, why did I get into the dollar yen fake out? Right? It was such a strong signal, but you didn't see what was happening at 11 a.m. on Aussie yen and 12 noon on the pound yen. If you did that intermarket analysis, then you would know that the dollar yen is already a weak breakout. And there's probably a very slim chance that I will take that. On the other hand, if it's 1500 UTC and I see a Euro Canadian bullish breakout, these guys are completely isolated from the yen Spider-Man and the Aussie and the British pound Spider-Man. These are different markets. So again, you're doing intermarket analysis and saying that, oh yeah, this is completely unrelated and this is a fresh breakout, assuming there are no, existing Euro or Canadian trends, right? That's happening in the moment or happened in the last couple of hours or days, right? Assuming it's a fresh Euro and fresh Canadian move, right? So at 1500, I will take 100% this EuroCAD bullish breakout. So let that sink in, I guess. Think about it and think how much more predictable the Forex market is comparing it to, the stock market where you're trying to juggle Spotify, Amazon, Google, Meta, Tesla, GME, I don't know. So many much more market forces in play there, lots of manipulation, and even more so in the cryptocurrency space. Again, the forex market is all about major economies doing what they do, right? And they're all very interrelated, right? So we can hop on to TradingView for a bit and let us see. Let me just switch over to TradingView actual examples. So I have my list here. I'm going on the Canadian list, so all Canadian pairs. And I will show you some of the breakouts. On our Trend Pro strategy indicator, we include the date and time when the signals happen so you can compare, right? So let's go through them one by one. I'm on the 1 hour chart. Let's do Aussie Canadian first. So you can see here, there's a breakout at November 23rd, 2200 UTC, right? There's a buy signal here. Is this a good buy signal? We will find out, right? Remember this, November 23rd, 2200 UTC. Let's go to CAD Swiss. Another breakout, November 23rd, 9 a.m. UTC. So much earlier than the Aussie CAD, right? So you would think, oh, this is, a little fresh, for example. Then have a look. Canadian yen, the CAD yen, November 23rd, 8 p.m., right? 2000 UTC. Okay. And then the Euro CAD, November 23rd as well, 9 a.m. So very similar to the CAD Swiss, right? Very similar. We go to the pound Canadian. Look at this. There was a buy signal November 15th, 7 a.m. All right. Much, much earlier. If you're considering a Canadian breakout trend, this is probably it, right? This is probably one of the fresher trends that's ongoing. How about the Kiwi Canadian? Much, much earlier. There was a buy signal here, November 11th. We got a signal for an exit here. But if you kept holding, you're still on this trend, right? There was actually another bullish signal here at November 18, much earlier as well compared to the Canadian Swiss and the Euro CAD. So still fresher, right? You could take this also, or if you're holding again, you're still on this uptrend, right? And then the dollar Canadian, which has no trends, right? No signals at all. So imagine if you're on your smartwatch, you're wearing your smartwatch, you get a signal. You got a signal Kiwi Canadian, November 11th, the earliest. I would take this in a heartbeat, right? Then if you get another signal, the next signal is actually on the pound Canadian, November 15th. This one I would second guess. Okay, I will not take this in a heartbeat, knowing that there's already a Kiwi Canadian signal that came out 4 days earlier, right? And this is at a resistance zone right here. It's a resistance zone automatically drawn. Again, we're using the Trend Pro strategy to come up with these signals automatically and feed them into your alerts and smartwatch, phone, whatever. Um, so yeah, if you want to have a look at the Trend Pro strategy and apply this type of intermarket analysis to your trading, feel free to check the links in the description. Um, and yeah, hope to see you in the next one. Bye bye.